Welcome back, everybody. It's currently Sunday, the 1st of August, and we're going to do our usually weekly recap of last week. This time, we're going to go fast, only on the hourly time frame, and we're going to sort of divide the recap in the pre FOMC, the FOMC conference, and after the FOMC conference. So, as you can see, we are at the start of the week, we are identifying a wedge that is being created against a strong 1795 support with no intraday, not even hourly closures below, and consecutive and strong lower highs being created by sellers against this strong support. So we can start, and we can see this is the last week of the month. We have FOMC, we have the personal consumption expenditures, and the GDP on Friday. These two. This is on Wednesday. So we are starting to identify the wedge being created. We are starting to identify that price will be ranging between key levels until we have our FOMC sentiment clear. So we're going really fast into the first day of the week. Remember, this is the hourly time frame. So as you can see, we are reacting on previous highs, failing to break above, and strong sell-off. Failing to break and sell off with strong reaction around 1795 key level, as you can see. This was Monday. As you can see, we are creating lower highs and a strong support still created at 1795. So we jump to Tuesday. As you can see, we reacted strong every time we tapped 1795. We have a strong reaction, but we are starting to see smaller impulsive buyers moves. And we move to our Tuesday analysis. As you can see, we saw strong reactions. We just want to range between, we don't see, prior to FOMC, I don't see any strong closure below 1795. And if we see some below, we can expect some price, some impulsive, aggressive buyers coming back from the sideline and pushing gold above 1795. So we are still playing in a smaller wedge. Let's move on Tuesday. So you can see strong reaction. The reason is that we don't have a clear sentiment. Then we have impulsive break above the order block created on the hourly time frame, and sellers jumping back in, clearly pointing lower highs. Okay, we're coming towards the end of Tuesday, and we're going into Wednesday, which is the FOMC day. During the night, we see a spike up to 1806 key level, and a reaction here. So let's move to Wednesday. Before the daily recap, we want to see the analysis. So far price has been respecting the dot, the wedge. So we are seeing we are seeing respecting the wedge. We just have to wait for the FOMC. I was expecting a liquidity grab below 1795 to 1789 to jump back up with continuous quantitative easing. Unemployment is too high. Interest rates are not going to be raised anytime soon, and inflation might also get higher. So let's see how it plays out during the day. Remember that the FOMC conference is at the end of the day for Central Europe, so which is around 8 p.m. So we can see reaction at the 1795. We're coming towards the conference. We see the last dip below 1795. Strong reaction, as you can see. And this is during the FOMC. We see price breaking above 1803, 1806. And then this is the post FOMC, breaking above the previous lower highs, making their way towards a bullish market. Why? Let's go and see what happened during the FOMC. So Powell's speech. Interest rates kept at 0.25. No tapering of assets anytime soon. They will keep the same purchase rate. Maximum employment is necessary to start tapering and to raise interest rates. It didn't give any precise number or percentage of employment. The inflation is still in expected range. They want to average 2%, but over the years. So they're expecting inflation to still be high in order to average the 2%. Since the last years, the inflation was lower than 2%. The economy is growing. The virus fear is dependent on vaccination and variants, but the growth is optimistic. But we still need substantial progress. As expected, no overly optimistic news for the dollar. We can expect dollar weakness in the upcoming days and weeks. So here we were just above 1803. 1807 area of interest, price sensitivity area. We already saw that caused a reaction here during the night. Here was a support, and then we will see on Thursday, how price moves. Okay, so we see during Asian a spike above 1812. Let's go on hourly on our analysis of the 29th of July. We might expecting pullbacks and a continuation up. We are expecting bullish trend. Let's jump and see. As you can see, during London, we see a smaller pullback than expected, up to 1815. And then continuation up above the key level. You see a retest of 1820. But always remember that we have what do we have on the left? Huge price sensitivity areas, 1824, 1831, 1833. But New York session brings liquidity, volume, and momentum on the upward. You can see we break above 1828 and we react to the 1831 and 1832 price sensitivity area on the left. We go below 1828, we react, we start ranging at the level. So we're going into Friday, last day of the week, end of the month. Be very careful of the reaction at the previous highs. As you can see, if we see that price fails to make new highs after London, New York pullback, or if we see price failing to break above, we see a last retest, failing, and then go down. Today we have the PCE, which is high, can give an impulse for keeping bullish the trend. If it's low, it might give dollar short strength, and combined with end of the week, end of the month, combined with profit taking, can give some corrections of this move. So let's see what happened. We see some ranging around 1828. We have the PC news. We are trying to break above 1831. You will see exactly here the news. The PC is lower than forecasted, which is good short term for the dollar. And we see final breakdown below the lows of the order block. A retest of the order block, as you can see here, and then huge profit taking at the end of the week, end of the month, as expected. So, pretty simple, pretty fast. This was the weekly recap.